be investing in growth stocks or in reliable dividend income paying stocks? There are certainly benefits to both. We'll be going over a couple examples of each and some of the pros and cons. We'll start with the more growth based tech stocks that tend to be the theme. We'll start out with Google. This is Alphabet stock, which is what the Google company is. This stock has performed quite well over the last couple of years and really in the last couple of decades. Well, just since 2004, it looks like, but the stock has gone on a rally, had a brief low in 2020 and a small dip in 2022, and then a dip in 2020. But Google, by large, in the last, we can do a last 10-year breakdown here. In the last 10 years, Google has gone up about 900%. We can take a look at a stock that is a little bit more of the dividend paying sort of stock. This one actually, Pfizer, has gone down 27% in the last 10 years. We can take a look at another one. We'll go with Altria. Hope I'm saying that correctly. But this one in the last 10 years has gone up about 7%. So this is a very telling sign. Dividend stocks don't are generally not the better investment to go with for long-term growth. If you're looking for a stock that just somewhat reliably gives you income, then dividend stocks can be good. But most of the time, people are looking for long-term growth, which is why generally people turn to growth stocks if they are going to invest one-on-one in individual stocks. Of course, when you invest in something a little bit more broad, like VU has a variety of tech stocks that are growth and other growth stocks, as well as income as well as income dividend producing stocks, has a lower volume or has a lower dividend yield at 1.03%. One of the benefits of the more stocks on the dividend side tend to have a higher rate. For example, the stock ticker MO has a tobacco company has about a 6% dividend. Pfizer, last I checked, has a slightly higher. They're sitting at a little over 7%. So these stocks generally do pay reliably, but it's important to note that that money isn't just coming out of thin air, and when it leaves the company, it does impact things. So the majority of the time, why companies in early stages, especially tech companies, decide not to issue a dividend is because they just better believe that that capital would best be allocated back into the business to encourage growth and in the long run make the stock price come up higher. Whereas generally more established companies that have been around for a while may eventually consider a dividend just as a way to attract people to buy their stock, and they issue depending on the size of the stock and depending on the yield, they issue some money just to all the shareholders based on how many shares they hold of that stock. But in general, I think it's good to diversify with both. I think I would recommend investing in dividend and growth stocks. I think it's probably the best option to do is just investing in a low-cost ETF or mutual fund like VU, something that encapsulates the whole market. But if you are going to go playing with stocks one-on-one, I think that it's good to have a mix of dividend and growth stocks in your portfolio. Don't forget to like and subscribe. Thanks. Bye.